welcome back to the channel. My name's Greg Secker. I'm here in the trading den, and finally I'm responding to all of your requests to cover the commonly most used indicator of all time, which is the MACD, the MACD indicator. We're going to be covering that on the channel right here, right now. Okay, so to jump into the MACD, the best way to do it is just to get straight into the technology and show you exactly how it works. Now, to start off with, MACD stands for Moving Average Convergence Divergence. You're effectively looking at not just a couple of moving average lines cross against each other. That's not what you're looking at all. You're looking at actually the difference between two moving averages against a signal line, which is supposed to show you, and it does in a lot of the cases, it shows you the beginning of a trend, the end of a trend, the beginning of a bullish trend, the beginning of a bearish trend, and it gives you some real accuracy around entering trades as well. It is a leading indicator, it's not a lagger. So because of that signal line, it does give you the ability to get in early on a trade, but there are a few things you need to be aware of too. So let's get into that and show you first and foremost just how to put it on a chart and how to set the settings up. And then I'm going to show you some of the idiosyncrasies around it so you can really understand how you use this. If you look at my screen right now, I'm looking at the Euro Sterling screen, standard screen. First thing I want you to be aware of is that this screen doesn't live all on its own. It lives in a matrix of 4 other screens where I'm looking at higher time frames. You'll notice that the screen I was on was the 30-minute chart, and that's for very good reason. Best chart to trade the MACD, 30 minutes. Let's make sure you're aware of that straight off the bat. Secondly, we look at the higher time frames first. So in this case, the 4-hour chart is below the standard green 200 exponential moving average. By the way, just for market convention, your standard moving averages should be on your charts is the 200 EMA, that's the exponential moving average, normally green. The 50 EMA is normally painted red, and sometimes we'll use a 20 EMA for a certain couple of different strategies I might introduce you to later on called the 20 bounce. That's normally a blue line. So normally blue for like a kind of a royal blue for your 20 EMA, red for your 50 EMA, and green for your 200. Anything under a 200 tends to be a bearish market. Anything above a 200 tends to be a bullish market. Let me just jump here at Euro Sterling, bring up that half-an-hour chart. You can see that, of course, it's bearish. The price is underneath the 200 EMA. May just be coming up to touch and fall further. Let's add now the MACD so you can really understand how this kind of put together. So I go here to my indicators. Quickest way to find it is use the search facility in Smart Charts. There it is, MACD. And you can see we've now dropped that onto the chart. Now the standard settings for the MACD are the following. It's on close prices, so on the closing price of each bar. This is a half-an-hour chart. You'll be happy to know that as a subscriber of Smart Charts, we plumb in the default settings of the MACD as to the appropriate ones consistent with this training, meaning that you've got a signal line, which is a 9-period exponential moving average of the MACD line. So the MACD line, which is the 12 and the difference between the 12 and the 26-period moving average, or exponential moving average, is then tested against this signal line. And that's really important because the signal line in this instance here, you'll see as a dotted line, that really indicates it's a line that with the MACD can be tested against. So if you look here, for example, when the MACD, that's the red line, breaks through the signal dotted line here, that indicates a sell-off. Similarly, when you're underneath the 0% line here, when the MACD breaks up through the dotted line, that indicates a buy, or it should be a bullish move, or the beginning of a bullish move. Of course, we know there's not going to be great bullish movements when the price data itself is underneath the 200 period moving average. So your first check is to make sure where is the price? Is it above or below the 200 moving average? And then we use the MACD for entry and for exit. So that's the most important thing. Now look, many people treat that as a black and white indication of when to enter, but I would say that's a wrong thing to do. Veteran traders know the signal line crossovers at positive or negative extremes should be really viewed with caution. These crossovers can be fake signals, not in this case that we're looking at on the chart, of course, but I want you to be aware that there can be false signals at the extremities. Now, normally, if you look at this signal here, let me just kind of stretch the chart out. I'm just going to move the indicator slightly smaller so I can focus on this price, and you'll see that, as you see, price is underneath the 200 here. So these kind of signals where you're looking for example, this MACD crossing down through the signal lines. This red MACD line breaks down through the dotted signal line. That indicates a sell position. You can see that's now just crossed through the 200 and is starting to work its way down. How can we be sure that we're using MACD or the MACD properly? Well, we want to make sure we've checked the higher time frame. So we know this is the half an hour time frame. We jump up here to the 4 hour time frame where we can see price. You can see, look, if I see H4, this is euro sterling. So price is underneath the 200 and underneath the 50. Now we're looking at the half an hour time frame, which really tells us whether we should be buying, whether we should be selling. Let's look at some currency pairs. What I've done is I've hearted some currency pairs in the top right hand corner here. So this H4, this 4 hour time frame, really tells me where the direction currently is for that market. So we know it's over the 200. We're more bullish on Aussie dollar right now. We can see that the Aussie dollar is quite well rallied. Now, if we were then to look at this half an hour time frame, we can bring that up. Okay, so now looking at this Aussie chart, we can see the price itself is above the 200, it's above the 50. And you'll see a following few things if you look quite closely at this indicator itself. Now notice the indicator is two things. It's a MACD line which tests against the dotted line. So this would be our entry. So we're below the zero. Notice the zero line here, and below that, that means that we've had a sell-off, as you can see we had over here. This is the bullish turning point. This is the beginning of your bullish continuation of the trend. The MACD histogram shows us momentum. So you'll notice that the greater these green bars, they aren't volume or anything crazy like that. They literally are the difference between those two lines. And the more that line peels away from the signal line, the stronger the momentum. So of course we can see that the line picked up here and it's really starting to rally as we look at this price here. We can see the price starts to flatten out here, and you'll notice the histogram is starting to get smaller. As that histogram starts to get smaller and smaller, we look for the zero turning point. And of course, that is when a selling position could come in. Now, of course, we wouldn't be placing a selling trade on this whatsoever. And the reason for that is quite simple. We're above the 50, we're above the 200. You know, the Aussie US market's strong. We wouldn't be looking to take short positions on this. So remember, there is an order here. Check. Let me give you the checklist here. We check the daily and the 4 hour time frame for direction. The 200 exponential moving average, that's our trend. We trade on the 30-minute chart. We look for the MACD to cross up when it's below the zero line and break up through the signal. That's got to be below zero for a long setup. Currencies that we're going to look at for this are Aussie US, Euro dollar, dollar yen, and Kiwi. They're your main four currency pairs. I want you to check on that. Let me give you the short setup for this. The short setup is pretty simple. It's we check the daily and the 4 hour time frames for direction. Again, the 200 exponential moving average is the trend. We're trading on this 30-minute chart. The MACD crossing down through the signal line, making sure it is above now the zero. So this zero line I keep talking about is where the indicator in the middle there is at zero. If it crosses down through here with price itself being below the 50 and the 200, which of course for the Aussie it's not, then we would have ourselves a short signal on. And so we use this tool quite interactively to get long positions when the price is above the 200 and the 50 on the main chart. And then we look to close that position. So if you look at this Aussie chart here, we'd be looking to enter here. We'd be looking to close here if you are consistent with your MACD trading. Now you might be interested to know how successful is this tool. Well, if you take 100 trades on the euro dollar on a 30-minute chart over the last 6 weeks of this year, you're talking about 66% profits, 34% losing trades. But here's the part you've got to be aware of. You're going to get winning streaks and losing streaks. So the winning streak over that period of time was about 8 to 10 winning trades, 4 to 5 losing trades. The question then becomes money management, risk control. This indicator alone has the potential to produce over 100% return on investment a year But that won't happen unless you money manage well and you keep your risk to less than 1 or 2%. Under the 2% line would be most important, because if you have a 5 losing trade streak, which can happen, that can put you off, certainly if you're risking 4 or 5 or 6 or 7%. So keep your risk to 2%. Keep your trades consistent with the strategy I just said. So the checklist again is check the 4 hour, check the daily for the time horizon. Make sure that the price is either, if it's above the 200, you know you're in a long market. If it's below the 200, you're in a short market. You're using your 30-minute chart. Now remember, your signal line is 9 periods. Okay, your MACD line is 26 and 12 period. You're looking for the MACD line to cross up through the signal line when it's less than 0%. We're looking at the histogram. So we're noticing that these histogram lines show us momentum. Look at the bars going up. As they start to move down, that's an early indication that you may be looking to close that trade, capture that profit. And we want to make sure that when we're going long, that signal has happened below the 0% line. This signal line, this dotted line being broken up through by the red MACD line is your long signal. Now you're watching the momentum of these bars. As long as that MACD line stays above that signal line, you're still long. It's calling you to close the trade here. If you were to abide by the MACD signal itself, would be to close that position here. So you're looking at kind of long from way back here underneath the 0 and then closing the position over here. Similarly, but on the flip side, the MACD is traded by, we enter, again, 30-minute chart. We check the daily and 4 hour time frames. 200 EMA is the trend. We trade on the 30-minute chart. The MACD has to cross down now, but above the 0 line, like it has done here. This wouldn't be a short signal for the Aussie US because, of course, the price is above the 50 and the 200. I hope you found that particular insight on the MACD useful. Remember, the histograms are there for momentum. The MACD and the signal give you your entry and exit signals. Check that 200 exponential moving average on the higher time frames. And if you like this video, don't forget to hit like. If you haven't subscribed to my channel already, please make sure you do that. And if you loved how simple it was for me to throw that MACD line, that histogram MACD onto the chart using Smart Charts, there's a 7-day free trial for any subscriber of my YouTube channel. You'll see that in the description and comments of this video. Make sure you click that, grab yourself the 7-day free trial if you haven't done already. And if you have any further questions about MACD, stick them in the comments and me and my team will get straight to you.